All right. Hello and welcome, everyone, to this webcast titled How to Thrive in a Trader's Market. My name is Steve Chappell, the Director of Trading Systems Development here. More on that in here in just a minute. Just want to make sure, a quick audio check, make sure everything's coming across okay. Should be loud and clear. Everything's checking out on my side. So I'm going to proceed ahead. It says here, you're in the right place right now if you currently dedicate or want to dedicate a portion of your portfolio to short-term trading to grow your portfolio faster. And so let's do a little better job of defining short-term then. We're certainly not talking about day trading. We're talking more so about swing type trades, more so than anything. Days to weeks. I think days to weeks would be what you'd want to think there on the short-term side of things. You're also in the right place if you want to feel confident in your decision that you bought the right stocks at the right time and you can sell them at the right time in the future. That's the most important part. Our founder comes from the tire business, so he might say something like, that's where the rubber meets the road. And it truly is. It truly is. And it's always a challenge. Always a challenge. We ended up getting rid of some of our contra ETFs today because when they bounce hard. And boy, we had some really nice profits. We'll talk more about that here in a sec. But it's always a challenge. You know, the day ended up pretty bearish by the time all was said and done here again. 4 straight pretty big down days, right? My goodness gracious. But our promise to you guys is that if you stick with us here for the next half hour to 45 minutes or so, I'm going to show you a way that you can adapt and thrive no matter what the market throws at you. Because at the end of the day, what you're going to need are the right tools for the job. You know, it's like anything. I remember when I was getting ready to sell my house just not that long ago. Seems like a long time already, but it really hasn't been. And anyway, I had a really large deck, and I got out there with the old belt sander. You know, I was going to sand the thing down and restain it myself. Oh my gosh, I got about 3 steps into the double staircase, not even to the flat surfaces yet. And I said, this isn't going to work, you know. I'm going to have to do this on the stairs, but my goodness, it's going to take me 7 days. I went down to the hardware store, got one of them big old drum belt sanders, you know, and knocked the whole top deck out, pretty large deck, in 30 minutes. It would have taken me days. You know, so that's the deal. I mean, you need the right tools to get the job done. We're going to be showing you those tools in this webcast, that's for sure. Again, my name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. I've been with the company now for more than 20 years. It's been quite a journey. I mean, it really has. I've seen this company really grow from its infancy into what we are now, which is a power player in the industry. There's just no doubt about it. I am just one cog in the wheel, though, one small part of a very, very good team. And we all pride ourselves in delivering the best stock market guidance anyone can get anywhere and even at any price. And we mean what we say. And today will be just another illustration of that. So we talked about the fact that you're going to need the right tools. You're going to need the right tools, and therefore you'll be able to adapt and therefore thrive in any market condition. So this is not an ABC strategy that we're going to be talking about today. In other words, your stock selection is really the huge variable in terms of what we trade. And we're going to talk about how we come up with those picks, how we manage them, and you know, all that fun stuff. Here's a couple of recent examples. Now I need to do some updating here because the most recent examples would have been a couple of campaigns here recently with contra ETFs again, and we've had several campaigns throughout the entire year, probably more than a half dozen. But we've also had nearly a half dozen bottom fishing campaigns this year. So we've been playing the market back and forth at a pretty good clip this year. And that's what the market has dictated. But in order to get that done, what you're looking at here really quick, just to kind of set the stage before we get into the actual tool and bounce around and show you what's going on today and you know what you could have been doing with the tool, say for just this past week. What you see on this particular day was one of the bottom fishing campaign days. And what we noticed, we have this Derby timing indicator down there in the bottom left corner. And you can see this big, long, tall, well, I don't know if you want to call it tall since it's stretching sideways, but it's a long green bar. And right below it is a short, little stubby red bar. That's an indicator that we monitor throughout every trading session. And we use that in conjunction with what we call here at VectorVest the primary wave. So the primary wave is week over week market direction. And like any good trader, we like to look for confirmation on a larger interval of time frame and a smaller interval, in this case intraday. So the Derby timing indicator is intraday, looking to confirm end of day information. And what we had going on at this particular juncture was a bottom fishing opportunity because our timing indicators were in oversold territory from a daily perspective. And then on the intraday basis, you see this huge green bar coming out that morning, and what we look for with that is the blast off day, the market where the market is found a bottom and is getting ready to really run, and did for several days in spots this year. I know it seems like the thing to have done all year long was just be short. In reality, that would have been a pretty good plan. But there have been good opportunities in spots on the upside. We then transition more towards the larger graphic in the middle. This is all the same tab in the program. You're going to see it again here in a sec, but you'll see these green bars. One says stalwarts, the other one says jailbreak. Those are a couple strategies in VectorVest. And since we were looking at bottom fishing, we went with jailbreak, Old Faithful. And those stocks were really popping, and those were the stocks we bought. And just a couple of days later, I think 3 on this very short campaign, we were up about 9% at one point. Walked away with pretty close to that when all was said and done. Oops. Here was another campaign just a little bit later. This one is in March of this year, 2022. You can see some of the dates in the center there if you're trying to spot something like that. You can also see the symbols and the company names, AEHR, bandwidth, so on down the list there. Oops, you guys can't see. All right, YouTube's been able to see. Sorry about that, guys. For whatever reason, I just saw your comments. For whatever reason, the video didn't start there. I'm not sure why. You should be able to see it now, so apologize for that. Let me roll back to the prior graphic then. Just make sure everybody's on the same page here. So this is a snapshot of the tool. Bottom left corner is that Derby timing indicator with the large green bar and the small red one. Okay, those indicators are 0 to 2. So anything above 1 is favorable. At a 184, it's a no-brainer day typically that you're going to have a pretty good day in front of you when you see those kinds of numbers early on in a trading session. This is a look at some of the performance. So we bought that jailbreak strategy, and by about 3 days end, we were up more than 9%. As of the time I took this screenshot, I think ultimately we went a bit higher and we ended up selling out around about 9% on that campaign. This is another campaign, bottom fishing. This one was done in March. So the prior one was done in January of this year. This one was done in March. Then we did another one. It was probably in April, and another one in around June timeframe, I believe. And another one even more recently than that. But so we've done it a number of times. But these are the kind of performances you can get in just weeks, basically. Days in the prior example, a little over a week, I believe, in this particular example, although this portfolio is up nearly 20% in 2 days' time already. Just to give you some idea. This is 2-day performance that you're looking at right there. Okay. So with that being said, what we need to do is show you how we do this. And it's going to be challenging to show you how we did the long ones. I'm going to focus on the current situation, and hopefully from that, you'll have a pretty good understanding of how we would have just turned everything on its head and gone about those long campaigns. Because really, it's just the opposite in what you want to do and how you want to attack things. So when you open up the homepage, for example, and the first thing you see is a lot of red, you're thinking more bearish than bullish to begin the day already. The global landscape right now is bearish. Everything's overall bearish and has been. Right? So the next thing that we check here is the trend column. And in the trend column, you've got 4 letters there. And the first 2 letters represent the primary wave. So we're in a down mode. So basically what we're looking for are confirmations with that timing indicator to emphasize that, yep, we're confirming down on an intraday basis, and it's okay then to pull the trigger on something like contra ETFs or stocks to sell short or, if you're into option trading, assuming your options due diligence and all that kind of stuff, anything that's bearish essentially. Okay, so that's the first stop. Check the primary wave trend, get an idea, are we currently up or down? And then when we get over to the Derby, then we're looking for confirmation. So, if the market were open right now and this were our reading, we are getting bearish confirmation of that number right now as we speak. Of course, it's the end of day reading because the markets are now closed. But you can see the 1.63 bearish bar there, and you can see the 0.66 bullish bar. Okay, so what's nice to see for some of you in that regard is, okay, well, it's bearish now, but how bearish was it throughout the day or prior days, or how does this all work? So what I can do is click on the Derby timing indicator box. We get a little bit of history there. And I was saying earlier that what we want to do is look for a bearish confirmation throughout the day. Okay, so it wasn't till really about after 10:30 this morning, the red line started to work its way above a critical level for us, which is 1.2. So we realize the indicator is scaled out 0 to 2. We realize that above 1 is favorable. We also realize that we want to try to create a slight edge. So we've got some nuances to this earlier in a session, but in general, after 10 o'clock, anything over 1.2 you can respond to if it's congruent with the primary wave stance. So again, if you're in a down, you're really just looking for the red to get above 1.2. If you're in a primary wave up, then you're looking for the green. So we can ignore some of this vacillation, if you will, with the green. We're really looking and searching for opportunity for the red to grab hold. And when it does, we feel pretty good about making an entry. So yeah, if I were studying this and going long today, I would have, or short today rather, long contra ETFs is what was in my head. We could have pulled the trigger around 10:30, and that would have been a good decision, right? So if we go back, we could have done it yesterday, much earlier with much more conviction, and that would have been a good decision, right? If we go back to the prior day, there's no confirmation here. None. Zippo, zilch. So we avoid getting off to a bad start that day. If we go back to the prior day, we could have gone short with tremendous conviction again on that day. You go back to the prior day, no real confirmation, and the markets went higher. See what I mean? So this intraday timing mechanism is phenomenal for people who just even have questions about, these guys at VectorVest, they always talk about, well, the color guard is green and the primary wave is up, but I need to look for follow through. This is the kind of thing that you would look for. If that were the case, you would have been favoring that green signal back there on the earliest day, and that would have been a good decision. But we're not. We're in a down, so really we're ignoring those. And if we're looking to do some trading, to start a new trade, we want that market to follow through for us. And so really 3 of the last 5 days have been favorable to either launch a campaign or cherry pick a stock or two, but that's bearish, whether that be buying contra ETFs long, selling short, what have you. So the next thing becomes this. So that's the timing aspect of it. Okay. So hopefully you understand. We're always looking for double confirmation. We're looking for the primary wave to be up or down, and then the DTI signal to match. And we don't like to take action unless that is the case. Okay. Which contras after 10:30 today? Well, we'll get to that. Okay. So if we go to the next layer here, that's the when to do something. So everything we've talked about so far is the when. Now we need to know the what, and then we need to know the how, right? So when, what, how. So right now we've covered the when, now we cover the what, then we'll get to the how. All right, so this is the what. So in terms of the what, Dr. Delito and I used to circle the globe teaching countless events everywhere from Hong Kong to right here in the good old US of A. And the most common question we received at any event that we ever taught anywhere in the world was, gee whiz, this looks like an incredibly powerful platform. I really like the timing aspect, the search selection, but my goodness, you guys have a lot of searches. So how does one know where to pick their stocks, right? And well, there's some obvious answers to that. And in reality, we could either one of us name off a baker's dozen amount of strategies that just tend to perform the best all the time, right? But the real answer is it's dependent on what's happening in the stock market. And so what we did was create this tool to address that question. And what I mean by that is the Derby has over 180 strategies within it. It's these green bars that you see here. They all have funny names, but each one of them is a viable stock market strategy. And you have everything in here from simple price and volume scans all the way up to high growth, to market capitalization, to blue chips, to contra ETFs, to bottom fishing, to whatever. Okay. And so within each one of these will be a list of 10 stocks. Right? Now, we said today was not a great day to be buying stocks, but lo and behold, there was a bullish strategy that bucked the trend and did make some money. That's rare. And I think that's part of the reason why we got a little edgy with our contra ETFs today, because some stocks are trying to jump now, and we've had some mixed results in the Derby all day. We've been seeing a lot of bullish and bearish strategies at the top. So that's usually indicative that the market's trying to make some kind of a turn, even if it's just for a day or two. Okay. But yeah, you've got Altimmune in here, Boyle, natural gas, right? So was it Russia shut down the pipeline again for 3 days, right? Is what they're saying right now. Who knows if they'll turn it back on or what? But natural gas is pumping. Boyle was up pretty good. So these are hit candidates. If we have a bullish bias, we would stick with a bullish strategy. If you're not bullish, you can simplify the list by just focusing on bearish strategies. And there were a lot of bearish strategies that made a good amount of money today. So you had Nomo Mojo. And this is a strategy that at about 10:30 was starting to plow to new higher ground. So hopefully you see how that jives then, right? So we said that was about the time where things started to get clean in terms of entering the market today on the bear side. Well, this strategy was starting to take off and went higher, after one would have made entry and just taking the 10 stocks that are listed here. Okay. The other thing would be, worst stocks over 20. That wasn't just the only one. The main thing, guys, is market direction. Then these short strategies look at really crappy stocks. So if the market is under pressure, these are the kind of stocks that are just going to get overrun. So you got things like Beyond Meat, okay, so on and so forth. These are companies that are above $10 that don't make any money. And so if you're above $10 right now and not making any money, it's going to be an awful tough slog in the stock market on a daily basis. And so this is low-hanging fruit. But this is the kind of thing that the Derby shows you. It shows you at any time that you open this up, whatever strategies are at or near the top, those are the ones that you want to focus on. And, if for whatever reason you come across a strategy and the prices are too low or too high or whatever, you just go to the next one. It's not so much that Nomo Mojo is going to absolutely be the very best strategy by the end of the day. It's that it's already off and running, and they often are one of the top strategies by the end of the day. So the likelihood is they're going to be near the top. So that's the idea, is to jump on. That's why we call it the Derby. The idea is to jump on the horses as they're leaving the gates. And if you went to Belmont, right, or if you went to the Kentucky Derby, and you had the ability to place your bet after the gates opened, wouldn't that be an advantage? You better believe it. Because the horses that get out in front often win, not always. I know, Seabiscuit and everything else. So there's always going to be a fast runner somewhere, but you're probably going to place, right? You're probably going to place. So that's the idea. and how we do and why we do what we do. Now, in terms of contras, if you want it, like, they're not at the top of the list here at the end of the day. And I don't remember, I did the Derby this morning. We'll talk more about that in a second. We have a live trading room where we show you all this stuff in real time and actually trade from it with real dollars, and people watch us do it. That way, it's the best kind of coaching. It's not just theoretical. It's watch them do it. So it's the real world, which is a bit different. We didn't take any trades today because we stopped that webcast at 10:30. That's the time we get off every day, and it just wasn't time to do anything based on what we were seeing at that time. Had we gone to 10:45, I would have been in positions. That's just the way it goes. So anyway, here's worst performing contra ETFs not too far down the list. And you can see then why this wasn't at the top of the Derby preponderance of the day. If you look at this portfolio mini graph out to the right, yeah, they were hot and not so hot in a lot of spots throughout the day. And so, no, we probably wouldn't have decided to pick up any contras today. In fact, certainly not ones with leverage. I can talk more about that here in a minute. But what we would have been focusing on more heavily is some of the shorting candidates from these top shorting strategies. Realizing that we're in a down market right now. So I don't want people to think that all these guys do is they get out there and look to short stocks and things. That's not, when the market stops going down and starts going up again, we'll be looking to do the same methodology, buying stocks long. Okay. 80% of this year, that has not been the case. So who knows how long that's going to persist for. But if you're not comfortable going short or buying contras, you better get comfortable doing it, because I think you're going to get plenty of more opportunity for that. So this is a great room to learn a lot about it, because we spend a lot of time doing it. So hopefully that at least gets us down the rabbit hole here a bit. So we trade through Ally Invest, and we've got several cherry picking portfolios in here where we pick stocks. You can see I sold the contras today largely because the green was trying to bounce there, and we had given back about 20% of our profits. So we cut. That's why it says minus 2.79%, and we only have Plug Power in there that's up and 2% and only down 0.5% today. We had four contra ETFs in here along with Plug. So we do play both directions when applicable. And I'm not in there every day, so some of these guys are far more aggressive than I am. We'll talk more about that at the end here as well. But Plug is still in there, and I guess plugging away as best it can. But 10%, and this has been running since August 8th. So this campaign, this 10%, is since August the 8th. Okay, today is what? Today's the 31st. So that's 3 weeks and 2 days. So that's 10% in 3 weeks and 2 days. Cherry picking this one. This one's been going since April and is only up 6. Okay. And these get reset all the time, just depending on how many stocks we're finally up to. This one's up about 1%, but everything's green, and it often is. Not always, but more often than not. Far more often than not. This one's been going since early August as well. So, shorts, this one's green also, okay? And this one we've done shorts in spots, and this one's since May, 7%. But what happens is if the market keeps ripping in a certain direction day after day after day, we train people every day. So we end up with like 30 and 40 stocks, and we got to delete some portfolios to put new ones in here and everything else. But these have all been running for a good amount of time. So it's good that you see that. It's also good that you see that all of them are green, right? So the way that we go about things works. And I reckon if you could see the portfolios of all the fancy folks talking to you on CNBC for the last 4 months, we'd probably look pretty good. All right. So anyway, it's a cool experience. So I want to talk more about that now. Now, in terms of management, maybe I should hit that first, and then come back and circle back and take some of the questions that you probably put in. In terms of management, it's going to vary a little bit. I wish you could have seen that. We had like 28.7 profit to loss ratios, 28% gain, 7 loss profit lockers on a lot of our trades here recently, 28.10s, I think even. So it varies to some degree depending on how volatile the asset is and what kind of market situation we're in. So if you're in a ripping and roaring market like 2020, 2021 in spots, you're going to be using something more like 50-15s, whereas if you're in a market like where we are now, and I pull it up, and the market rips for a couple of weeks and then rips the other way for a couple, for several weeks, and back and forth she goes. You got to be a little bit more in tune with that with your stop loss decisions. So we often lay out stop losses according to two things: the kinds of stocks that we're trading. You can't walk out there with a 5% stop loss on a triple leveraged contra ETF. You'll get bounced out intraday on noise. So, you've got to, there's some pieces to put together there, but largely what we do is either a 28-10-7 kind of combination. We try to get as close to 2 or 3 to 1 as possible, or we do more of like a 50-15, or in some cases, if we're at an extreme market bottom, we might even raise that target to 100. And rightly so, because many of them will go past 50. So it just is, it's just a function of where you are situationally as to what stop losses we use. More on the stop loss, I'll show you that quickly. It's more than just a simple gain loss, and I think I know that I want to get that message across. So it's got a trailing component to it and also kind of a floating component. But this is a picture of what the stop loss would look like, say on almost like an option expiration basis, where what it's doing is it's actually assuming linear stock price progression. That is a major assumption. But what that does is it allows you to draw out the parabola of the stop loss. Okay. So initially you have a straight trail. Once you get to profitability, the stop loss broadens, thereby mission number 1 is accomplished. We're now profitable. Let's give it a little bit more room to maneuver to try to get a lot higher. Now, as you get a lot higher, more towards whatever your target percentage ends up being, in this case 50, it really starts to tighten more and more and faster the closer you get to that 50% gain. Okay. So the idea here, the reason we call it profit locker, is if we pick the right stocks and they go the right direction, we want to have a pretty tight, not too tight, but a pretty tight leash on things early. We're going to loosen things up a bit once we get to profitability, and then we're going to really ratchet in on the profits as we get closer to our targets. Realizing once we get profitable, we're not going to take anything, we're not going to take a loss. Now, gaps happen, weird stuff happens. I think we've had, I don't know, in the 7 years that we've been doing this every single morning, I think we've had 3 stocks that have had, missed clinical trials or, just weird news events where they'll gap down 40 or 50% overnight. That has happened. Those things do happen, right? But they're rare. I just told you we can have 30, 40 trades going sometimes. It's on the back of thousands of trades. It's happened 3 or 4 times in the last 7 years. So that's kind of the way all of that works. But the idea here is, give them some room to get towards those profits as soon as you can, thereby giving yourself the highest chance to be successful. All right, so let me close that out. So hopefully that makes sense. Tex looks pretty spiffy. Yeah, Tex is, I'm not sure if Tex is one that we were in. Let me see. I know we had tech because we've been picking on tech in small cap for sure, because that's struggle. People are selling growth right now, or hopeful growth at that, right? So yeah, tech. So SQQQ, SOX, TECS, all that. Yeah, perfect sense. And the same thing with SRTY and TZA, which are the small cap triples, right? But if we look here, I've got trade history. See, we had SOX short, we had FNGD. We've had SOX short a couple of times here in just the last 3 weeks. We made 18% one time and 10% the other. See what I mean? So this one was from 817 to 824, and this one was from 826 to 831. So what happened was, you might say, well, why'd you do that for? Well, it worked out both times, but the other reason, if we go back to the market timing graph, so you had this little whipsaw in here, not whipsaw, but little fake out. Now, I will tell you what I was telling folks this day, or maybe it was even this day. Glenn might have been in there that day. I'm not sure. But what we were saying was, I know I was saying it in the daily color guard report. It's on tape. You can go back and look. I said in the daily color guard report this day that this whole run up into the Jackson Hole event is silly. But what happens is if you're in triples, we got into the triples here, 817. That was a pretty good time to get into the triples, wasn't it? That's the kind of coaching you're going to get in this room. That's one day off the peak, guys. And we didn't get faked out by that one. That's one day off the peak. Okay. We enjoyed a nice ride. We're sitting very nicely profitable. And by the time you got here, the way triples work is they're triple good when you're going the right direction, and they're triple bad when you're on the wrong side. So we had to bounce out with only a 10% gain at that point. Okay. I want to make that clear. But what we did was, we're not sure what's going on here, but a good bit of our profit is gone. Half of it, for example, we are going to close those down and see what happens after the event. And then Glenn got back into the contras this day at about 10:15 that morning. Okay. Or whatever time it was. We'll go back and see. But 826, if we go back to the reports, this is cool because now you can see, the kind of coaching you're going to get and how timely it is as these recent events have unfolded. So we would have gotten you in one day off the peak into contras. We would have taken profits here and gotten you right back into the contras right after the Fed announcement from Jackson Hole was complete. And the way that we do that is how I showed you earlier with the DTI timing in conjunction with the primary wave. Okay. And then if I go back to the back to the reports, oops, hit the right button, Chapel. Trade history. So he would have 826, and you can see we're that's about 55% trade accuracy in just this 3 weeks or whatever. But anyway, let's back on track, Chapel. 9:42 on the initial campaign. So 9:42 a.m. on the day, one day off the peak. Okay. And we got in at 10:30. It looks like 10:34 after the Fed announcement. And that makes sense. I can't show it anymore, but it was, oddly enough, about 10:30 that day when the VectorVest composite made a new low, the primary wave was down, and the DTI really bearish line, the red lines really started to take off. So you had that kind of a three-headed monster going right there. And you felt pretty good that you've now got the true reaction from the meeting. If you guys have been around and been around Fed days for a number of years, you can see some wacky stuff on the back of these kinds of announcements. You can have double and triple moves sometimes. So Glenn did the right thing here and played it a little safer that day because it was a Fed day. And just make sure there wasn't some kind of double move there where the market was caught off guard a little bit. Okay, seems like the market pretty well had it figured out before it went into play there actually. I'm not sure the retail guy did, but the market did. Okay, enough of that. So, yeah, I mean, I've been trading for 20 years, so I've traded plenty of Fed days to know how all that tends to go, you know? All right. But anyway, back on track, Chapel. So what are we talking about, right? What we're talking about is the tools to get the job done. And what I'm showing you is a way that, if I just go back to the graph, I think that's the best place to end up. We've got the tools to get you in short the market here, 9:42 a.m. on 8/17. We've also got the tools to take those profits and then get you right back in at 10:34 a.m. that morning. And the coach let everybody down today because we only walked away with about 10% from the peak, because the market did look like it was going to grab and push higher today. And what I was showing folks was, I don't know how many of you are familiar with flags and pennants and things, but we started to get a DTI bullish that went above 1.2, and the market had pulled back, essentially the same distance, and still is essentially the same distance. So 4 straight down days, I think there's a very good chance you see a bounce day tomorrow. Why would you say that, right? Stop drawing lines, Chapel. Show these people what they need to see. 1, 2, 3, 4, 5. That one made it 5 before a bounce day. How many more strings of 4 days do we see here? 1, 2, 3, 4, 5. So 5 there. 1, 2, 3, 4. 1, 2, 3. 1, 2, 3, 4. We'll call that 4. There's a bounce day in the middle. 1, 2, 3, 4, 5. Right? So 1, 2, 3, 4. So around 4 or 5 days, even when things are really bad, is a long time. So, and in a triple, what you've made in 3 days can quickly go away in 1 day if you're not careful, or a good bit of it, more than half of it. So you got to be on guard there a little bit, and that's why we did what we did. So now, knowing all of that, hopefully you feel like we're people that may know what they're doing. All right, let's get you back over here. All right, that's the best I can show you with what I got. We're working on another automated system where we can automate a lot of what we're talking about here. We had one. It worked really well for about 3.5 years. And then, just got stuck in the mud. And so we're trying to get one unstuck. We're trying to find an automated way. But right now, what we're doing is flexing our VectorVest knowledge. We're flexing the VectorVest tool, most importantly, because without the VectorVest tool, we have no knowledge at all, essentially. So it's having the right tools. If we have the right tools, whether we have to get in there and grind it out for you guys and show you exactly what we're going to do to make money, or whether we can automate it, that's what we're going to do. Some people love the cherry picking stocks, don't care for automation whatsoever. Actually, I find that to be most people. But there are others who want an easy button, where you can just automate all this stuff we're talking about. So we're working on that. But if being able to make 10% in this last month, while other people are flailing around, probably pulling their hair out, is interesting to you, today you learned how to keep the wind at your back in your short-term trades. You learned a stress-free way to evolve with the changing market conditions. There is no such thing as you can't do it. If you want to do it, I will show you how. We will show you how. Myself, Patrick France, Glenn Tompkins. Okay? Those would be your 3 instructors. If you want to be able to do this, you can do it. There's no such thing as can't. People have been telling me my whole life I couldn't do something. I've done everything they told me that I couldn't do. Literally. So you can adapt and thrive no matter what the market throws at you. Okay? 30-day trial, $29. You don't even have to do any trades. You can just sit there and watch us do it. In fact, we're not telling you what to do. We're showing you what we would do. You can obviously make some decisions from that. That's on you, right? But to watch us trade, watch us see if we can do 10% the next month. Right? So for $30, you can come in there and, throw sticky wad papers at, well, you can. It's electronic, right? You can put in all kinds of funny comments, picking on us, whatever you want to do. I don't care, but I would make better use of your time than that. I would get in there and learn how to make 10% in just a few weeks, right? And be able to do that consistently. I showed you in the graphics. We've been doing it all year long in spurts. Unfortunately, we've had a few campaigns that didn't work out as well as others, but net, we're up pretty big on the year. Now, if I put this out into the chat, this is a link. You guys on YouTube, you're going to have to go to the website. I don't have access to the chat in YouTube. So you're going to have to go to vectorvest.com/thrive. You guys know how to do it. You're technology savvy. I got no worries about anybody there. I do a little extra hand holding when I can, though, no matter how tech savvy or unsavvy you are. So in GoToWebinar, for those of you that are in this room, GoToWebinar room, you can click on a link I just put out into your chat, and that'll take you right to this web page. When you get there, it'll detail the entire offer. So it is only $29 just for a month, just to check it out. It's going to give you everything you need to do what we did today. I'm not going to go through all this stuff. There's more stuff here than you need, really, and it's not worth going through everything. This is a tremendous value. I think that's at the end of the day what all this ends up pointing out. $29. After that, you need to decide what you're going to do. Whether you want it does automatically renew. You would call to cancel if you decided you did not want to go forward with the next month. What I always tell people is, in the first 30 days, if we can't show you how spending $2,590 a year is worth it to you, then you don't continue. It's that simple. It's that simple. If we can't prove it to you in the 30 days, and I don't care what the 30 days are, I don't care if the market's going up, down. Well, I do. It give us another month if it's sideways. But we'll probably still be okay. Up, down, you'll see value, no question. Okay. So it's $29, 30 days. Let's just hope the market moves somewhere in the 30 days. In the kind of market we're in now, we're not going to have a problem with that. So $29, that's it. All right, any questions? I'll be glad to answer those questions for you now. It does move to either $249 a month or $25.90 a year. $25.90 a year is less. If for some reason 6 months down the road you wanted to cancel, we can do a refund. A time refund on that. Okay. Is the Derby good for us Canadians? It absolutely is. Unfortunately, we don't have a trading room for it. I do believe you have a Canadian Derby. We just don't cover it in the U.S. Trading room. I will say this. I'm just going to talk brass tacks. And I've met a lot of traders in a lot of places around the world. Just about anybody who trades, doing the kinds of things that we're talking about today, they trade the U.S. market. And they do it because of liquidity. So we tried to piece something together with the Canadian Derby, and it just didn't have the legs. So it still works. It just doesn't have as good of legs. I would encourage you to do the U.S. market with the Derby. That's my final answer there. Let's see. I would like to do this offer, but out of the country until September 8th. Would I be able to start my 30-day trials after that date? William, just send me an email, stevec@vectorvest.com, okay? I'll get you in. stevec@vectorvest.com. I'll take care of you. Just remind me. No worries, bud. When does the trial start? So the trial would actually start tomorrow. In fact, if you do the order here, well, it says you got 5 days, 16 hours, 45 minutes, and 48 seconds. Hurry. That doesn't seem like hurrying to me. But seeing you get quick wit in the trading room too. But anyway, if you sign up now, you're probably going to be in there by tomorrow morning, because the team should be able to turn that order around within the next few hours, and you're going to start getting your confirmation emails. And as part of the confirmation emails, you're also going to receive instructions on how to get into the trading room. You'll also, once you get your confirmation emails of the $29 expenditure, Next time you open up VectorVest 7, you will have the Derby tab. So that will then be in your product. In the Derby tab, we also have help videos and quick start guides and all kinds of fun stuff in here. I would certainly encourage you to print out the quick start guide. It's going to talk a lot about our primary focuses on market trend, how to place your bets, a little overview. You know, it walks through a lot of the stuff that I went through pretty quickly, a little bit more carefully, and gives you some ideas on how you can use the tool. So it's really, really good. And I would print that out. You'll also see in the Derby tab, although you can't see it at this screen resolution until I do this, you'll also have this Enter the Jockey Club here at the top, and that's tied to your account. So you will be able to just open VectorVest 7, click there any day, Monday through Friday, assuming the market is open at 9 a.m. and join the webcast. You'll also get an email with a link to the GoToWebinar webcast as well. So you can join from either place. Okay. Actually, it asks you to log in when you get there. So I think that's how we end up doing the identifier. All right, let's see. When do you meet every day? Good question. So this tied right into that. And we meet at 9 a.m. to 10:30 a.m. New York City time. 9 a.m. to 10:30 a.m. New York City time every single day. You have 3 instructors. Patrick is on Tuesdays. I am on Monday and Wednesdays, and Glenn is on Thursday and Fridays. Now, we have other responsibilities outside of the Jockey Club. So on occasion, I might not be in there one week at all, and you'll have more Glenn and Patrick, and vice versa, right? But those are your 3 guys, and that's usually the schedule we're on. I'm Monday, Wednesday, Patrick's Tuesday, Glenn's Thursday, Friday, predominantly. And it's good. That way, you know, some people identify with one of the 3 of us better than the other 3 and so on. And that's good. I mean, that's cool. That's why we have different people and different personalities in there as well. But some weeks I've been in there every single day. Some weeks Glenn's been in there every day, some weeks. And I think Patrick might have even been in there every day one week. I'm not sure. So it just kind of depends on what we have going on here as well. But everybody knows what they're doing. And everybody participated in that 10% in 3 weeks. All right, let's see. Is there a Derby search for optionable stocks? Well, most of the Derby searches are going to be optionable stocks only. That's part of the Derby Ready search attribute. So, for example, Nomo Mojo. If I go to the search description, it says here, no conscious. All right, it does not require options on this particular one. So some of them do, some of them don't. But most of your stocks are going to be. And you could always, if you wanted to, add an option filter to the base search. But most all of these are going to be optionable. They've got plenty of liquidity and they're of high enough price. The other thing I would say is this, maybe final thought on that note. You can always, we have overrides. So you can say, I want $10 minimums and 500,000 average volume. I think, yeah, I know that one's optionable. 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 I know that one. All of these are optionable. Every single one. And yes, it's scary, but I do know what all of those stocks are and whether they're good or bad. All right, let's see. Do you coach anything else? Yeah, I coach all kinds of stuff, man. I've been around here forever. I've coached everything from technical analysis to options back and forth and everything in between. I've learned it all. But as it pertains to this particular webcast, I'm your guy for trading in helping you use the Derby tool in this particular aspect. But some of our higher end courses like Trade Like a Pro, things like that, I'm in there, bottom fishing, options. Although I'm not, I haven't done much with options here in quite a while. They've kind of pushed me more down the trading route to make sure we take care of you guys on the trading front side of things. So I've been pushed more this direction as we've grown. We've got an options guy now. Ron knows more than I do. I mean, he's great. So we've got a good team, man. That's what I love about VectorVest is just about anywhere you look, you got the right guy. Jim is great in retirement services. Ron is great with options. You got the right guys in trading. You're in good shape. You're in good shape. All right, guys. So thanks for spending some time with me. I got to run. Hopefully we at least got you interested. I know at some stage, if you're a trader, you're going to end up here. It's just a matter of time. You will eventually. We'll get you. So, we're not going to do any kind of high pressure sales or anything like that. There's no need to. If we're good at what we do, you'll end up in there. You're going to hear about it from others or whatever the case is. But we tried to open some eyes today best we could with what we have available in that trading account right now. And keep looking for us. We'll be here. We'll see you soon. Guys. Gotta go. Bye now.